Hey folks, welcome back to our Forex trading course. My name is Timothy Carrier. Today we have some few things and very important key concepts that you need to understand. And our today's lesson's objective, you'll be able to understand what is support and resistance. You'll be in a position to differentiate between support and resistance, understand what is a trend line, identify types of trend lines, understand what is a channel, and be in a position to differentiate the various types of channels. Let's begin with support. When we talk about support, what do we mean? Support is an area in the Forex chart where prices drop and fails or struggles to break below. Normally, prices bounce sharply from an area of support. It indicates traders' willingness to take long positions. What am I talking about? In this screenshot, you can see I have an area of support. This is an area of support. You can see the first instant price came to this point, it bounced off, it came again to the second point and bounced off. Then it went all the way up, came again to this area, bounced off, came again to this area, bounced off. So you can see this is an area that prices is struggling to break below. Okay, so this becomes our support. Okay, like for instance, when you're in a building, the floor is your support. It supports you from sinking or going beneath. Therefore, this is the support that you're talking about in Forex trading is similar to that example that I've given you. So I will be showing you how you are able to draw this support and resistance, but basically you just need these 2 points, the first point and the second point, and then you extend this line. So you'll be waiting anytime the price comes back to that line for you to trigger or for you to look for an entry for a long position or a buy position. Okay, so don't worry about that. We shall just dwell into it more practically. This is just theory. Then we have resistance, and resistance is an area in the Forex chart where prices rise and fails or struggles to break above. Okay, so in this case, giving a typical example, a resistant is like when you're in a room, the ceiling is your resistant. So it prevents you from, even if you jump, it prevents you from going above or breaking above. Okay. So price normally bounces sharply from an area of resistance. It indicates traders' willingness to take short positions. So this is resistance. This is resistance. As you can see the first instant the price bounced off, the second instant the price bounced off, the third, fourth, and the fifth time. Okay, so this shows a strong point of resistance or a strong area of resistance. And in this area, we just need 2 points, the first point and the second point, and we extend the line for us to have and then now you need to wait for the price to confirm. The third point is for your confirmation, and once the price bounces off, you look for your entry positions. Okay, there are key pointers that you need to know about support and resistance, and the first one is that when the price of an asset or security moves up uh, and retraces, the highest point it reaches before it retraces is referred to as resistance. Like I just explained, when the price of an asset or security moves down and retraces, the lowest point it reaches before it retraces back is referred to as support. Therefore, as the price keeps moving up and down over time, it keeps forming supports and resistance. Okay, but you need to note that supports and resistance, they are levels or support and resistance levels. They are zones and not just exact numbers. For instance, if I go back here, so this, I've just drawn a single line, but just understand that This is not a single line. This is a zone. So we can have a zone covering all the way up to this week. Okay, so it's a zone. I'll be able to illustrate that better when we shall be doing the practicals. When we go to the chart, we try to see how we draw support and resistance. Okay. Also, you need to understand that resistance becomes support if the price breaks above it. And the same case, support becomes resistant if price breaks below it. Another key aspect that you need to understand is that the more times a price tests the area of support or resistance, the stronger the level of support and resistance. Let me go back this screenshot. You can see in this screenshot, the price has tested this area how many times? 1, 2, 3, 4. So this becomes a very strong resistant. It becomes a very strong resistant. In essence, the more the tests of a resistance or support, or the more the times a price tests a point of resistance or support and it fails to break it, the more or the stronger the support or resistance. Okay? During breakout, the strength of the wave after breakout depends on how strong the level of support or resistance broken was. So this means, let's say we have an area of support and the price retested that area 3 times before breaking. And we have another area of support and the price retested that area 6 times before breakout. Therefore, the wave of the length of the support that had 3 retests will be less or will be less stronger than the wave of the support that had 6 retests. Okay, so the number of retests, it indicates that if the price breaks out of that region or out of that level, it will form a strong wave. Okay, let's look at trend lines. This is another key concept that you need to understand. And trend lines are lines connecting two or more points in the same level. They help traders spot or identify best entry points for long positions in an uptrend and best entry points for short positions in a downtrend. There are basically 3 types of trend lines. We have the uptrend, that is when the price is forming higher highs and higher lows. I will be able to illustrate that, don't worry. We have downtrend, that is when price forms lower highs and lower lows. And we have the sideway, this is when the market is consolidating or the market is ranging. When drawing the trend lines, you need to identify at least 2 major swing points. It can be 2 major swing lows or 2 major swing highs. You connect them using a line. Then you adjust your line to get the most number of touches and you extend it. So here, the key pointers that you need to note is that we use at least 2 lows or highs to draw a trend line, but it takes 3 lows or highs to confirm whether it's valid or to confirm its validity. And therefore, the more times a trend line is tested, the stronger it becomes. This point is very important, just like we said in support and resistance. If a trend line is more steep, it becomes less reliable. Therefore, we want to trade in a trend line that is less steep. The gradient is low. Okay, I will illustrate all that, don't worry, just be with me. Here you can see this is an uptrend, and as you can see, this was our first swing, this was our second swing, and now we extend this line. Therefore, it takes the 3rd swing to confirm the validity of this trend line, this uptrend line, okay? And here, this is the point where you begin triggering or looking for your entries, either for your buy entries. Once price comes again back here, you look for you look for your entries. Okay, these arrows I've shown, these are the places you look for your entry. So this is an uptrend. It's just like a support, okay, but it's slanted. The reason we are calling it a trend line, it is supporting the price from going lower. So it's making the price to keep going high. Okay, we have the downtrend. And for the downtrend, you can see the price keeps bouncing up from this level. So the downtrend or the downtrend line, this acts like it's a slanted resistant. Okay, it's a resistant but in a slanted manner. So this was the first point, and this was the second point. So the first and the second point enable us to draw this line and extend it, and therefore we shall be waiting for the third touch. This is our confirmation touch on the this is our confirmation on the validity of this trend line in this downtrend, and therefore you begin looking for your entries at this from the third touch, the fourth touch, the fifth touch, as indicated in these arrows. Okay, and for you to better understand how to do this, or how to draw the trend lines and all the support and resistance, and even the channels that you're going to cover, I will be doing a video to illustrate in the market, to illustrate how to draw. We try to identify these points, these trend lines, support and resistance, and all that, and this will make your work easier. Okay. Then we have the sideways. We have the sideways. And in the sideways, we said this is a consolidating market or a ranging market. So you can see the market has been moving sideways for almost 3 days, actually, not almost, for 3 days. Okay, the market has been ranging. It has been ranging up, down, up, down, up, down. So this is sideways. So in a ranging market, as we progress, you'll be able to understand how we take trades in a ranging market, because there is a concept, a whole concept of trading rectangles, that is chart patterns, rectangles. And with this one, you'll be able to understand the best side to take your trade depending on the previous move of the market. Okay, so this will be much clearer as we move forward. But most of the traders, but which usually do sell at this point, and they buy at this point. They sell at this point, they buy at this point. But as a professional trader, that is very wrong. That is very wrong, because the market will either will break out in either of the direction. And for you to understand which direction the market will break out, you need to understand the concept of rectangles. Okay, there is a whole concept of chart patterns, and there we shall cover the rectangles, the wedges, the triangles, all those stuff. You'll be able to understand and be in a better position to apply that knowledge and be able to trade in a sideways market. Then we have what we call channels, and channels are formed when there are two parallel trend lines. Okay, they help traders spot best entries for sell or buy. There are two types of channels, up channel and down channel. And in a down channel, when the price hits and bounces off from the upper trend line, traders look to short the asset. And in an uptrend channel, when prices hit and bounces off from the lower trend line, traders look long the asset. When I say to long the asset, they look to buy. When I say to short, they look sell. You remember the Forex terminologies that we covered? So don't get confused. So this is an up channel. And as you can see, this is an up channel. And the price, there is an upper trend line and there is the lower trend line. So these trend lines are parallel to each other, okay? So this makes now this to be a channel. The price is moving within this channel, not in a sideway, but it's an up channel. So the price are increasing, or the price is moving higher, but in a channel. And in an up channel, we said that you need to, when the price bounces off from the lower trend line, this is the lower trend line, you look to long the market, or you look for your buys. So we need this point and this point, this point and this point, and we extend this line, and then we clone it, or the best way to ensure that it's parallel is to clone it, and I'll show you how to clone it. And here we need this point and this point, and then we extend the line. Now confirm the channel. So our third point, since we said in an up channel we look to buy, our third point is this. So at this point, it's whereby we shall start looking for our buy entries. Again, when the market comes here, you look for your buy entries, you look for your buy entries, you look for your buy entries. Your take profit will be this uptrend, this the upper trend line. This will be where your take profit will be, okay? And what happens at this point? You can see I have a question mark. What happens at this point? Someone will ask me, what happens at this point? You take a buy. You said that we take a buy. Yes. And now we have taken a buy and the market is against us. That is normal. I'll tell you, this is very much normal. This is very much okay. It should not worry you. Remember, in Forex trading, there is no one trader who is 100% correct. So these are instances when the market will get you in the wrong side, or instances when you just take your losses and accept that things have changed. And the reason why you need to ensure proper risk management all through. And I'll be teaching you more about risk management. Then we have a down channel. A down channel, you can see these two lines, these two trend lines are parallel to each other. And we said in a down channel, we are looking to sell when the price is the upper, bounces off from the upper trend line. So we need this point and this point. The first point and the second point, we extend the line. And then the first point and the second point, we extend this lower line. And this will form now our channel. So our third point, which is our confirmation point, is at this point. So at this point, when the price bounces off, you look for your sell entries. When the price bounces off, you look for your sell entries. The same issue, the same case, I mean. So what will guide you, you don't just take your trade when the price hits these trend lines or support or channels. You don't, because the price has reached at this area, you don't just take your trade blindly. There are some things that will guide you. And one of the key aspects that will guide you is the candlesticks patterns, okay? The candlesticks patterns will be able to guide you accordingly. And for instance, let's see here, we have a candlestick pattern that I can be able to identify here, but this might confuse you at this time until we do what we call candlesticks patterns. Once you have done candlesticks patterns, you'll now be able to understand how to apply candlesticks patterns when trading these down channels, when trading support and resistance, and when trading trend lines, okay? So that will become easier for you. In our next class, we shall begin by seeing how to set up a demo account, and then we shall go into the market and try to identify supports and resistance, trend lines, and channels. I'll show you practically how to draw them. I will show you how to be able to identify them in a live market. Okay, so ensure you are tuned up, or you subscribe and turn on notification such that you don't miss my next video. I had promised to share Telegram links whereby I'll be offering support, and this is for only support and for education purposes only. And below you'll be able to see the links that I've shared. You can click and join, and let's learn together. Let's build a community of successful Forex traders. That is my desire. And I look forward to seeing you there. Thank you so much. See you in the next video.